Hello, this is TheoTrade. My name is Doc Severson. This is the nightly report for Thursday, May 26th. The only chart I'm going to show tonight is the S&P 500 chart. So if we do a top-down analysis on what's going on here, I'm going to show you what's going on with the price, and then what I'm going to talk about are the main risk events that we're going to be looking at over the next 2 weeks, which I believe will more than likely push this market out of the current range that it's in. All right, so let's define this range, first of all, from the monthly chart basis. So this is a huge range. We are over 300 points on this monthly range, which has been setting up, really, I'd say, ever since the 2014 time frame. So the latter part of 2014 is when we started to establish this range. We've made 1, 2, 3 tests of the bottom end of this range and multiple tests of the upside of this range. Currently, the price is only just a handful of points away from the top side of this range, which is about 2134 or so. Now, most of us are used to thinking about markets correcting in terms of price. So when we think of a correction, we think back to 2008, early 2009, and we drop 40% in terms of the price, and we do it in such a rapid and vicious manner that it catches everyone's attention. So that's one way to consolidate or correct for a move. Another way to consolidate is just for the price to go sideways in a large range like this. Price can correct either through distance or through time. And what we've been seeing over the last 18 months or so is the price correcting through time. So I feel that we have a potential of about 500 S&P points on tap right now, because this type of consolidation does nothing but wind the spring up tighter and tighter and tighter until this thing is about ready to go. And this is exactly the mode that it's in right now. So is this energy going to go to the upside? We're going to have 500 points tagged onto the upside. We're going to be sitting there at S&P 2600 within a year, or is this going to make a very rapid trip down and we're going to see S&P 1600 again? Well, to answer that question, we're going to have to look at the lower time frames, because reversals start from the inside out. Reversals and or breakouts of a range start from the smallest time frames, and then they propagate up from one time frame to the next time frame. So with that in mind, let's go down to the weekly chart down here in the middle. So the weekly chart is, in the context of this huge range of the monthly chart, is just showing us more detail on what's going on. But what's particularly important, which has occurred in just the last few months here, is this enormous 300-point move off of the bottom from 1800 to about 2100 so far. And what it's showing is a transition from a downtrend back into an uptrend again. So now we have an important higher low, which is setting up here at about 2020 or so. And so right now what I'm seeing is the price kind of stuck within this range, within this box up here, bordered by about 2020. Again, this is the S&P futures here. About 2100 on the upside, about 2020 on the downside. Okay, so a couple of things can happen from here. Obviously, the price can continue to rally and head up through here. And if it's able to get above the 2134 level, we could see a lot of short covering and a surprising move. I don't think anybody is really giving the chart any kind of a chance to rally higher from here. We have a huge amount of skepticism out there across just about every sector of trading, whether it's retail or professional. Right, so that gives me a little pause to think that sometimes the market will do whatever is necessary to inflict the greatest amount of pain upon the widest cross-section of traders. And that would certainly meet that criteria for that. All right, to the downside now, how would this move play out? Well, what's going to happen here is, first of all, a lower high would set up at this weekly chart, and we'd start to head lower from here. A lower high actually would start the process of changing this into a downtrend again. And this would be particularly dangerous if we see this price drop below 2020 or so. Now, if it drops below that 2020 level, all right, we do have some support here at 2000, but I think ultimately we're probably heading lower from here, maybe down to that 1800 level again. Is a fourth time a charm? What I've normally found is that most support levels will handle up to about 3 tests of support, and usually after that it's gone. It just buckles under that. So this is why we have to watch this range that's sitting up here, this approximately 80-point range that we have, because it's going to hold the clues for what really is going to happen next, more than likely, for the rest of 2016. This is going to set the tone, what occurs in this sort of octagon here. Right, I know it's not an octagon, but you can think of this as sort of that cage match, right? So just think about this battle that's going on within this range, and that's been within this for several weeks now. And the victor of this, whoever emerges from this range, is going to set the tone for the rest of this year. So as we go down further in time to the daily chart, we get even more detail down here in terms of what's happening within the range. So what we saw was, and sometimes we can pick up clues from the characters, this downtrend that we had from mid-April, right? So for about the last month, we've been just very quietly moving lower, very quietly moving lower. This is not a panic sell-off. This is not a trapdoor move. This is not your typical waterfall decline. This was just a very, very gracious move to the downside, and actually did find support at a fib level of 23.6%, which is actually a very, very shallow pullback. So that is kind of a clue in terms of the character, and then we've seen a very strong rally from this over the last 3 or 4 days. So if this rally is going to continue and punch through the top of this box, what we're going to see is a series of higher lows, higher highs, and eventually a new higher high above and beyond this range. If we see this fail, what's going to happen is at some point we're going to pull back very sharply here. Any attempt to rally is going to be met by another lower high setting up here, and this forms a very important weekly lower high. So this is how this is all going to play out depending on what occurs from this level. Okay, so that's the analysis from the price action level on the S&P 500. What we're going to find is pretty much the same analogy across whether we look at the NASDAQ or whether we look at the Dow or even to some degree the Russell, even though the Russell is much, much lower, is come down a lot lower. It's come down about 30-some% off of the highs and is struggling to get back to from whence it came. So what's going to break it out of this range? Well, we've just about tied up earnings for the first quarter, right? So first quarter earnings are just about all done, and we won't get into second quarter earnings until we turn the clock and get into the July timeframe. So it's going to be a while. It's going to be well over a month before we get into that round of earnings again and the next potential catalyst for moving the market around. So it comes back to the Fed, as always. Really what we've found to be the number one market driver, at least over the last 10 years or so, has been the Federal Open Market Committee and any speeches by the chairman or chairwoman in this case. So let's talk about some of the risks that we're going to see from economic events or speeches over the next couple of weeks or so here. So first of all, what we have is tomorrow morning, so Friday at 8:30 a.m. Eastern Time, is going to be GDP. So this is the GDP. We're still working on the first quarter. This is the second estimate of that. The first time we read this, it was 0.5%. So 0.5% growth on GDP. The consensus number is that this is going to be upwardly revised to 0.9% tomorrow. So we're going to watch for that very carefully. So again, this occurs pre-market. It will be reacted to through the futures to see whether or not this occurs. Now, of course, this number will go into whatever the Fed decides. And tomorrow we have a little bit of risk coming in with Janet Yellen speaking at 1:30 p.m. Eastern Time. Okay. Now, this is going to be a speech at Harvard, and the word on the street is that she's going to avoid anything to do with discussing fiscal policy, which she has done in the past at certain luncheons, right? She's been very, very upfront and very transparent with discussing financial policy at these luncheons, but the word on the street is that she is not going to do this tomorrow because it's more focused around an event and she doesn't want to make it a circus. Okay, so that is tomorrow. So we're going to see some movement before that, certainly early in the morning with the GDP, and then maybe people are going to be holding their breath to see if Yellen says anything around there. But I think into tomorrow afternoon, we're going to have zero volume as everybody swivel chairs away from their workstation and heads out for a long, extended, and well-deserved 3-day holiday. Okay, so after that, we have next Friday, so a week from tomorrow, so Friday, June 3rd. So June 3rd, we have jobs. Okay, so that's going to be huge, as always. And it's not necessarily whether a good number equals a good reaction to that. It's also sometimes going to be how the Fed is going to respond with their fiscal policy. Really, that's been the game over the last 7-8 years anyway, is how does a number affect Fed policy? And so the last time we had a jobs report in early May, it was actually just a terrible number, with big miss. So we'll see whether or not we'll continue with that trend or whether this one's going to be a big beat. So here's the big one, though. Monday, June 6th is Yellen again. And she's going to be on tap for a speech on Monday the 6th. I don't know what time that is at this point. But this one is going to telegraph how their FOMC meeting is going to occur, which is going to be the policy release as well as the Fed conference is going to be Wednesday, 6:15. Wednesday, 6:15. So that's a 15 in there, right? So that is the regular FOMC policy release, and this is one of the big ones, right? And if they are hammering the table like they have been lately in terms of ramping up policy, okay, they only have a limited number of these windows to do that before the election. They will not do this right before the election. They are not going to be rocking the boat ahead of the election. They're going to wait until the December meeting before they potentially do anything at all, right? So there's going to be kind of a quiet period around the early November timeframe, all right? And that includes the late October meeting that they typically will enact policy on. So these are the risks that we're going to be dealing with over the next couple of weeks here, and they will move the market, and I believe they will move the market outside of this range. The odds are very, very high of that occurring. So thanks for listening, folks. Have yourself a great holiday weekend. Be safe, and I'll see you back here early next week. Take care.